The $2.25 trillion Biden spending plan would introduce a profound change to the U.S. economy. It would reverse a 4-decade-long decline in government investment that began in the Reagan years. Here's the graph to look at. Government investment in the economy. It's fallen steadily from above 1% of the economy back in the 1980s to around 0.7% now. It's been kind of stagnant. It only pops briefly with spending bills after recessions. President Biden highlighted this decline in a speech yesterday.
We've fallen back. The rest of the world is closing in and closing in fast. We can't allow this to continue. American Jobs Plan is the biggest increase in our federal non-defense research and development spending on record.
Daniel Yergin, whose book Commanding Heights chronicled the way economic leadership swings back and forth between companies or the private sector and government, told me yesterday, quote, "The frontier between government and the private sector is never fixed, and it's always shifting." Biden certainly is pushing out the boundary of government again in relation to the economy. Several economists worried that the amount of spending on top of the recent $1.9 trillion stimulus bill and a recovering economy would crowd out private investment. John Riding from Breen Capital says, we're going to have crowding out. That's what happens with an economy that gets to full capacity, and then you demand more from it. Still, analysts at the Penn Wharton budget model tell me that the spending will raise the level of wages by 0.2% over a 10-year period and GDP by 0.3%. That's the level, but reduce capital spending overall by 0.1%. Now, a 2016 study from the Congressional Budget Office estimates a 5% return on productive government investment. Returns 5%. But the debate's already begun about how much of the spending in this bill, with its expanded definition of infrastructure, will end up being productive.
Shepard Smith here. Thanks for watching CNBC on YouTube.